Hello and welcome back to another episode of Financial Deep Dive with CWT. My name is Caleb Tanner on FinanceByCWT.com, which is a website where you can learn all about investing, the stock market, all of that kind of stuff. We got tons of blogs, podcasts like this one and all that. Yeah, so go check it out, FinanceByCWT.com. And on this podcast episode, I want to talk about real estate. And I want to talk about like a bunch of different types to actually go about and invest in real estate. The reason that I'm making this episode and talking about this topic in particular is a lot of it's from me actually. I went on and I've been trying to figure out how to dip my toes a little bit into real estate. I don't ever want it to be a large percentage of my portfolio. Just like a small one. Just a small percentage of it. I want to be diversified enough to include real estate. And, I've tried to look at, the best ways to actually do it. And the way that fits what I want from real estate best. And obviously, I think the best way to get into real estate is just going out, buying a property and, renting it out. But that takes a lot of cash, a lot more work because you have to manage it. So, and while I would like to do that and own a few different, rental properties just for, a little bit more income coming in, right now, I've been trying to look at what's the best strategy right now for me. So in my research, I found a bunch of different things to kind of look into. And that's kind of what this episode is going to be about. Just looking at each different way to invest into real estate. And then at the end, I'm going to try to talk about what I really plan to do now. So while looking into it, the obvious thing would be, REITs, real estate investment trusts. And that's something that I've been looking at for quite a while. I've never actually been, investing into REITs because it's not, it's never been something that I wanted to do, mostly because, I think investing money into the S&P 500 or investing money in other, just a dividend-paying ETF, I think over a long period of time will outperform the REITs. And the best ones that I saw for that, if I was going to invest into an REIT, I would do either V&Q, which is from Vanguard, or SCHH, which is from Schwab. And because those are usually companies where if they have funds out there, they're going to be lower PE ratios, which I really like, or not lower PE ratios, lower expense ratios. They don't charge as much to actually manage the money. And that's something I really want. I don't like investing into ETFs with very high expense ratios, which most of them are going to be a little bit hard there, but Vanguard's always been one that I've really liked because they usually charge not much at all to actually manage your money, which is important for something like that. And when you look at just V&Q and SCHH, I think V&Q is probably the one that I would invest in if I went with this method of real estate, because I believe not the expense ratio. I believe the dividend yield's a little bit higher, so you make a little bit more money on it. But both of these look like pretty good ones. But also, I haven't really done it before because I do not think that these will outperform just buying the S&P 500 over a long period of time. But for a way to diversify that money, dip the toe a little bit into real estate and put more into properties and stuff like that, then just stocks, get a little bit of balance. That is something that I probably will be investing in. I'd like to, or at least add it to Maratha or something like that, so I have a little bit of real estate there that I'm not able to touch for the next 40 years. So besides REITs, which I still think are a great way to buy real estate, there's another way to passively buy it that I think is really cool, and it's an app called Fundrise. And I have not used the app yet. I've mostly just been researching, and I still don't know how Fundrise fits into what I want from real estate. But basically, it's a way to crowdfund properties, basically. Investors will, basically a ton of investors will basically put money together and buy individual properties, and then I'll get a piece of the rent and all that stuff based off how much they themselves own. And I like that idea a lot. Crowdfunding is something I believe in 100%. If you've been listening to this podcast for a while, you know that, like, especially like startup crowdfunding platforms are something that I've been studying quite a bit and doing a lot of different business with. But real estate crowdfunding, I think, is actually an amazing idea. The only My only drawback from joining Fundrise, and the only reason that I have not yet, is that if you look at it, it's kind of expensive, like, to manage it. You know, they take a 1% management fee, which is not like an insane amount of money or anything like that. But when you're, like, if you were dealing with a lot of money, 1% adds up to be quite a bit. And while I'm not, while with like what I want, it doesn't matter too much, I think 1% is pretty high when you could go do something like, an REIT from like Vanguard, and it's way less than that. Like, it doesn't even compare how much like different it is to actually run it. And like a 1% management fee, it's I don't know. It sounds like a lot, but also, like, if you're giving your money to like a hedge fund, it would be 2% of the initial deposit was 20% of the carry. But with all like of it together, investing in Fundrise is a lot more expensive than investing into an REIT. And really, to me, it seems like the only real difference is that with Fundrise, you're a lot less liquid because you're actually buying into the properties themselves. But with an REIT, like one from Vanguard, like, let's say you put $1,000 in there, tomorrow you could take that $1,000 right back out. With REITs, it's locked up for a little bit. Like, it's actually a lot harder to become liquid, which is fine because with what I want out of it, it doesn't matter. Because what I want out of like real estate is something that I don't plan to touch at all for the next 40 years minimum. So having, I don't really care if my money's liquid or non-liquid. A lot of the investing that I'm doing right now is into private equity startups. So, those are not going to be liquid for quite some time. But I do find what I struggle to see is like the benefits that Fundrise provides that REIT does not. Because if an REIT is, like, if they, let's say that they perform about the same, which I think they do, at least the story, like, for a lot of, like, from the research I did, it seems like Fundrise and like a classic REIT basically perform about the same. So let's go with that and say they do, right? And if one, the REIT is more liquid and the other one's not, and they perform about the same, really the same amount of money, but less of a fee over here, it seems like REITs have way more pros than something like Fundrise does. But what I like about Fundrise is that it's not publicly traded, for one. Not like the company itself, because they might be. They're not yet, but they're planning to be. You can actually buy shares in the company from the Fundrise app, which is really cool. But I like how it's actually private properties, like properties that not everyone gets to own. Like, it seems, like, I like the idea of that. So right now, while I probably will invest into REITs, I'm probably not going to touch Fundrise yet. I do think, I'm 100% certain that at some point in my life I will be investing on Fundrise. Right now, REITs way more fit what I want to do. And last, I do think it would be awesome to actually buy a few properties myself that I'm 100% of and manage them. It would be interesting how to do it. Like, how I'd probably do it is, buy one and basically turn it into different apartments inside. Like, buy like a house, something like that, and turn it into like different like apartments inside. There's actually someone that I've been meeting with recently where we've been talking about doing that. And that's something that I really want to do. I would love to like own a few like rental properties. And that takes a lot more cash than the rest of these. And it's a lot more work than the rest of these because you actually have to manage the properties and all that stuff. But that is something that I've been looking at myself. Right now, I'm more buying a property for me to live in to turn to a rental property later. But I do want to start actually, owning some equity like that itself. And I think real estate's something that I do want to, like, more and more, like, learn about. Like, right now, stuff like REITs and Fundrise are easier, especially with, like, what I want from real estate right now. Like, it's easier, it fits better, it's a little bit more passive. In fact, a lot more passive. But actually owning property is something that I definitely want to do too. And I'm currently, in the market looking for my first one. I'm ready to get my first property under there, start renting out and all that stuff. But while I'm doing that, I want to start parking like a few dollars into like, REITs, probably add it to my Roth IRA so I can have a little bit of real estate in there. And, I'm really excited to see all that goes. And those are like the three things I really had been researching when it comes to real estate. If any of y'all watching this know an even better way to invest into real estate, let me know in the comments below. And as always, go to financebystwt.com and like check out all kinds of like awesome blogs, podcasts. There's actually investing apps you can download from the website itself. They get free stocks just for signing up through us. It's absolutely amazing. Yeah, so check that out right now. Subscribe to the channel, and I'll see you in the next episode. Thank you for watching.